everyone. Happy Monday. I am so excited to come before you another day. I decided that I'm going to be doing this more often. So you're going to see me more likely every other day or sometime every day. I am Melissa Lambert. I am the CEO and the visionary of Lambert Legacy Financial. I am powered by an amazing company, Core Financial Partners. And every Monday, you're going to hear me come on every Monday, and we're going to talk about infinite banking concept. One of the things that I really want to stress is that we too can own our own banks, right? In society, we were taught to open up a traditional bank at one of the major banks, what the Wells Fargo's, the Bank of America, the PNC, the Fifth Third, and whatever your bank, it just call out your bank, right? However, we were never told that we actually can be the bank. So today's episode, I'm going to really kind of dig deeper and talk more about how you are going to protect your children. What we should have known when we were younger was never taught to us by our parents because they did not know. Right? So because they did not know, they couldn't have passed on that information to us. Right? So this is a time where we now are able to pass on that information to them. So I'm going to share my screen in a few minutes, and I'm going to make sure that I can see my screen. So you're going to see me look down for a minute, and I'm going to make sure I can see that my screen is going live. And I'm going to just go in detail about how you can protect your children. Okay, so let me just confirm that we are good to gravy. Okay. Awesome. So I'm going to share my screen to be sure that we're able to see. And hold on, y'all. I promise you I won't be with you long, but I really want you to grab this information. For those who are listening to this live, for those who are going to be watching the replay, don't forget to share this with someone you like, love, and trust. Those who have children, those who have nieces, those who have nephews, those who have grandkids, this is very important for them to see and know this information. So let me go ahead and share. Okay, let me just see if you can see my screen. Hold on one second. Okay, perfect. So I'm going to go ahead and have this conversation and this dialogue with you to kind of get you going and growing. So again, my name is Melissa Lambert, and I am the CEO and the visionary of Lambert Legacy Financial. So who am I? I am a financial consultant, a licensed financial consultant, and the founder of Lambert Legacy Financial, powered by Core Financial Partner. I do have a passion for empowering individuals and families. And one of the passion that it comes from for me is taking control, helping people to take control of what we know is important to them, right? Their families, right? To take control also of their financial future and also finding a way to help them create legacy. So let me now dig deeper a little bit more. I just want to make sure that you guys are able to still see. Let me just see if you guys are able to see it. Sometimes this the live we do it and then it's not showing. So I want to kind of confirm that we're good to go and you are seeing the information as is. All right, so Lambert Legacy Financial. I'm here to help you kind of really open up your understanding, know exactly how you can protect your children. So we're going to talk about protecting your children with the infinite banking concept. So what does that look like? Okay, so let me just make sure. I don't know why I feel like we're stuck on this one page, but if you guys are able to see it, I want to make sure you are able to see that I've moved the screen. Hold on one second. I still feel like I am stuck. Hold on. Are you guys able to see it? If you can, let me know. I'm going to stop sharing for a second just to be clear that you are able to see. Okay, hold on one second. I'm going to come out of this to be sure because this is my first time using this slideshow. But okay, so let me see if I can go back again and share the screen. And hopefully this time you're able to see the full screen of me moving around. And I'm going to take it from the same slideshow that we have. So let me just make sure we are good. I wonder if you're able to see it. If I go like this, will it go? I guess I cannot do it. Hold on one second. It's not going to allow me to do it openly that way. So let me just do it this way. All right, so I think I can't do it in an open screen, so I'm gonna have to do it this way. So I now understand what I need to do. Okay, got you. Y'all listen, this is first time of the first for everything. So I'm hoping that you're able to see the screen on a bigger way. I can't share it where it's larger, so I'm gonna have to zoom it in for you, okay? Make sure you are able to see it that way. If I zoom it in, okay, there we go. All right, y'all. So we're going to do it together. So Lambert Legacy Financial, that is the name of my company. We're going to talk about protecting your child with the infinite banking concept. So how does Lambert Legacy Financial, powered by Core Financial Partners, really can help you and your family? So listen, let's get started. Go straight into the concept. So our vision here is to educate first, not to take your money, not to do anything else, but first to educate, guide, and empower you to become your own bank. You know, you are working so hard for this money, right? To give your children the best future, to give your children the best possible education, to give them shelter, to make sure they're okay physically, emotionally, and financially, right? So you want to be able to know how you can do that in an empowering way that's going to give them some leverage in the future. So our vision here is to educate, guide, and empower people to become their own bankers, taking charge of their financial freedom. The mission, again, is to provide financial education and tailored solution that transform families from dependency on a traditional banking system. So again, we all have, as parents, we've all been told to go get a bank account, open up a checking and a savings account. I will say interrupt your money every single week, every single day, every single week, every single month in your checking account, because that's the account you're paying your bills through. So you're interrupting the flow of money every single time, right? So that's the traditional bank. However, they also tell you to do a savings account where you put a certain amount of money in that a savings account, not understanding that savings account only yield you only 0.01% interest, which is really nothing, right? They're not telling you that they're going to be using your money on the market to make money for them, right? You are the actual consumer and the business for the banks. We are the business for the banks. Without us consumers, the banks have no business. So they need our money to leverage. They need our money to basically, they can print money, 10x the money. So if you put 1,000 in, they can actually 10x that and loan that out to people in response to the fact that they're going to loan it out with interest, which they're going to make from your money and put that back in, right? So understand that is a traditional way. However, I want you to understand there is another way. We can do what the banks are doing and not only what they're saying. What they're saying to us is keep our warehouse our money with them. warehouse our money where they control. They can shut down our account anytime they want. They can tell us who can put money in our account and who cannot. They can tell us how much your daily limit is. Remind you, this is the same money that you work so hard for, but someone else control it because you are warehousing it somewhere else. So as parents, we were taught that traditionally, right? That's a traditional way. So we was indoctrinated to do that. I'm coming to you as a parent myself to tell you there is another way. We can teach our children another way to be able to say, I am the bank. All right, so let's continue. So I'm going to go through five pathways to secure your child's future wealth. 5 pathways. So I'm going to zoom in a little bit so you can see that. I know that. Okay. So I'm going to zoom in a little bit out, a little out. Let me put this, hold on one second, y'all. Let me minimize this a little bit. Okay. So hopefully that is kind of bigger for you. Okay. So this is the 5 pathways. Hold on. There it is. All right. So these are the 5 pathways to securing your child's financial future, right? First, we're going to talk about cash value and living benefits. What does that look like? Then we're going to talk about there's literally always a way to be insured. So there's always a way to be insured. We're going to talk about that. The third path we're going to talk about is guaranteed future insurability option. We're also fourth going to talk about future family protection at a locked in rate. And 5, we're going to talk about the times and resources to grieve. So these are the 5 pathways to secure your child's future wealth. So I'm going to stop because some people like to screenshot. So you can screenshot it if you want at this moment. So let's move to the next slide. So I'm hoping that this do play for you and you can hear the sound. So I'm going to play a quick video and I'm hoping you can hear it as well.
Whenever we borrow money to finance the purchase of a car or a boat, furniture or appliances, a new roof or home addition, a college education or postgraduate degree, we typically pay more interest to a credit union, bank, or finance company than we earn on our own savings and investments. For example, we might pay interest rates of 6 to 13% on a car loan or credit card, while we earn as little as 1 or 2% on a savings account, and hope to average 7 or 8% on a 401k account. But now there's a way to become our own bankers and profit from our own borrowing, because now we can set up our own bank and pay interest to ourselves on our own terms and without any application or loan approval process. It's called private equity banking, and it's made possible by Internal Revenue Code Section 7702, which allows us to put money into what the IRS refers to as a qualified contract with a legal reserve insurance company. This provision of the tax code allows us to transfer money from our savings or investment accounts into one of these qualified contracts, continue earning interest or dividends without any taxation or investment risk, and then borrow up to 90% of this money using the contract equity as security or collateral. Of course, there is an internal cost or charge to borrow the money, in much the same way that banks must pay depositors for the use of their money, which means that we are obligated to pay off these loans with interest, just as we do with a credit union, bank, or finance company. But with our own bank, our loan collateral continues to earn interest or dividends without any taxation or investment risk, so our bank equity continues to grow while we use the money any way we want. What's more, there is no application or qualification required, no credit check or reporting to any credit agency, and no delay in getting the money. You simply submit a one-page form and get the money by check or direct deposit, usually within 48 hours. And like a revolving line of credit, there is no mandatory repayment schedule. So we determine the repayment amount, the months or years for repayment, and the interest rate we pay back into the contract. And any interest we pay over the minimum is a profit for us, which is added to our bank equity. This is the same way that banks and finance companies profit from lending money. However, before we can borrow any money, we must capitalize our private equity bank by transferring money into the contract that would otherwise go into our savings and investments. This might include a percentage of our monthly income, a yearly bonus from our employer, annual tax refunds from the government, or any inheritance from our relatives, as well as money we've already saved in other accounts. But once our bank is sufficiently capitalized, we can borrow against the contract equity at any time and as often as we want, without any credit check or loan approval process. We can simply submit a short one-page form to borrow up to 90% of our bank equity, and the money is either sent to us by check or deposited electronically into a checking account within a day or two. Some contracts even provide debit cards that we can use to access our funds, similar to a revolving line of credit. What's more, we decide when we want to begin paying off our loan, how much we want to pay, and how often we want to pay it. However, we want to have all our loans paid off by the time we retire, so that we can then supplement our retirement income with tax-free money from our private equity bank. And if the contract is properly structured, any loan debt remaining at the end of our lives will be contractually paid off for us, tax-free. To learn more about setting up your own private equity bank, talk with the financial security professional who asked you to watch this video.
Awesome. Awesome. I just wanted you to kind of get a little bit about what it is that we're talking about. This is another way for you to say, I can control the wealth or the money I am making or I am earning each and every day, week, month, and year. So let's become our own bank. Okay, so now let's move to the next phase of everything. And you saw on the right-hand side, if you see here where I was showing you this right here, this is the book that I need you to get. If you're part of the challenge, I do have a 21-day wealth challenge that is going on right now. So this is an opportunity for you to join the 21-day wealth challenge starting today. Even if you start 3 days, 5 days, and you're still going to get the information that's needed. And there's 2 books that I would love for you to get within the challenge. The first book is this one that you see on the screen, Becoming Your Own Banker by R. Nelson Nash. R. Nelson Nash, he is the founder of the Becoming Your Own Banker concept. So definitely it's a 92-page read, an easily read that you can go through. And the second book is this book right here. I'm not sure if you can see it, but this is my book. It's called Coming Out of My Financial Egypt, Now Living in Abundance. So this is also a 92-page read, 10 chapters, very small, interactive book that I'm asking each and every person to get. So you can get both books on Amazon. You can go directly to my link at Melissa, MELLISA books.com, MELLISA books.com to get my copy of my book. But they're both books are on Amazon. Those 2 books will kind of give you and help you on this journey of you now learning how you cannot protect only yourself, but protect your children and your entire family. So let's go now deeper into the next slide. So I'm going to kind of zoom out because it's kind of cutting off. There it is. Okay, perfect. So the power of becoming your own banker. I mean, there is power in everything that we do, right? So depending on what you're doing, you can say, you know what, I don't have the strength for this. But this right here is something that you need to really, really open your mind to learn and to understand, because regardless of the matter, I'm going to say this as a financial consultant to you, regardless of the matter, if you don't become your own bank, you're going to give away that money anyway to a traditional bank. You are going to release control to someone else where you're warehousing your money into another person's name. Wells Fargo, a Bank of America, the Chase. It is not your name. It is somewhere. It's another it's a company, a corporation that has a title of a bank incorporation under a bank, and that is where you're going to warehouse your money, which means they have full control of it. Once you release it into their hands, it's now into their possession, and they can dictate if it's going to be, your account is going to freeze, if you're going to have, if you decide to overdraft your account, they're going to charge you a fee, because even though you know you're going to have money coming in, because it's warehoused there, they're going to dictate what goes in, what goes out. If there's a fees, if there's not a fee, they dictate all that. However, I'm sharing with you today how you can get the power back. Get the power back. And how do you get that power back? By understanding, talking with me, working with me to help you to get your bank started through the infinite banking concept way. So what is the infinite banking concept? It is a financial strategy where you use a properly, and I'm going to say the word properly structured. The word structured is very important. Structured whole life insurance policy to create a personal banking system. You may say, how do you do that? I have an insurance policy, and that I haven't done because they're not licensed by the Nelson Nash Institute or under a practitioner to show you how to do that. Right? Myself, I am under 2 licensed practitioner from the Nelson Nash Institute, which is the owner and the founders of Core Financial Partners. And I'm also a student right now sitting to do my practitioner license with the Nelson Nash Institute. So all 3 of us, myself, Tony, and Latoya, have the knowledge to help you with a properly structured whole life insurance policy to help you create that personal banking system that you deserve. Second, what is infinite banking? Infinite banking actually will help you manage, grow, and access your money with tax advantages and liquidity and control on your own terms. So I want you to understand that. So it's like when people say, oh, so how much is to start a bank? Isn't starting a bank expensive? No, not this way. Whatever you're saving in a traditional bank, all I'm saying to you is move it to where you control it. I'm going to say that again. Whatever you're saving in a traditional bank, which gives you no dividends, which gives you no death insurance, which don't give you any growth, whatever you're saving in that traditional bank. Example, you may be a person that saves $500 a month. Move that $500 a month to your personal privatized banking system. Now you're taking that same 500 and you're going to have 3 things for that same 500. 1, you're going to still have a savings that's going to grow uninterrupted compound growth. 2, you're going to have that same 500 going to give you what we call dividends, surplus that's going to be given to you every year. Okay. And 3, that same 500 that you have had saved in your traditional account, you're going to have access to now buy whole life and term policy with this money. So the same $500 that you have been saving, or $1,000 or $2,000, whatever you're saving on a monthly basis in your traditional account where you have no control, we're saying to you right now, you can take that same savings and move it where it's privatized, and you're able to now get more for your money. You work so hard for something that you can't even control. So infinite banking system is a powerful system to use. And we're going to show you how you can now transition that and also help your child. Like my daughter is only 12 years old, but guess what? Chelsea has 2 banks. She will open up her 3rd bank on next month for her birthday. Okay. Well, not she, but I will be opening that up for her. So I'm going to zoom this in a little bit more. Let me see if I can do something different. Let me display it. Okay, hold on. I'm trying to see if it can be displayed where you guys can see it without me. I think it's not going to do that. All right, so let me go back. It's not going to, I'm trying to zoom it in a little bit for you. So let me just go back. Here we go. So infinite banking concept, infinite banking, a financial legacy for your children. We want to create that. I want you to understand that you can create. It's not something that is hard. People always say, is this a hard concept for us to create? No, it's not. Not when you have a licensed financial consultant like myself to help you along the way, as well as my business partners, Tony and Latoya Chambly, which will also be helping you along the way. So infinite banking concept, again, allows you, we may call it IBC. It allows you to create a financial foundation. Here's that word foundation. Everything that we do is built upon something, right? So when you send your kids to school in preschool, it's going to give them the foundation of learning. Then you send them from preschool to kindergarten. Remember, from preschool, the kindergarten teacher is going to build upon what they have learned and now give them the next stage of learning so they can go to the first grade and continue on in life, right? So the same concept with IBC, infinite banking, you're going to allow you to create a financial foundation for your child or your children using a whole life policy with cash value and living benefits. So we just space that, y'all. So I want you to understand that a child cannot get term policy. Only adults can. So you will have a whole life and a term. However, your children will only have a whole life policy. And we'll go more deep in detail with that. Okay, so pathway number 1. This is powerful. You see these children, they got that money in their hands, y'all. Listen, so cash value and living benefits for your child's future. The cash value earned from your permanent life policy, whole life policy, can be used for different things. So my daughter Chelsea can use that same money that's in her policy, and you will get a chance to see what her policy look like, right? She can use that for college tuition or expenses. She can use that same cash value in that policy. She can use that to finance a vehicle. She can use that to finance her wedding. She can use that as a down payment on her first home. She can use that to start a business. She can use that as a collateral for a loan. Whatever she wants to use her cash value within her life insurance policy, which is the bank, you as a parent started early for them, right? They now have access to use that right away, right? Someone asked me, one of my colleagues asked me, so when my daughter's 18, can she pull some money out to do a sweet our 18th birthday party or do? I said, absolutely. And she asked me, can I turn the policy over to her at that time? If she's working, absolutely, yes. But we're teaching them how the flow of money also work in the process. So even though she's 12 right now, her daughter is 12, like my daughter, we're going to be teaching them. That's why I do cash flow, the cash flow game for kids, the cash flow game for adults. Why? In those games, we're teaching them real life situation that can cause opportunity loss, and also show them how if they don't have cash flowing, they can buy assets. Right. So it's a lot that we're teaching them. We're not just going to be selling you something. We educate first. We educate and continue to educate you so you can have reassurance of what we're sharing with you is a lifelong lesson that is going to grow with you and your children and your children's children. That's called generational wealth. So that's pathway 1. Pathway 1 is cash value and living benefits for your children's future. Number 2, pathway number 2. Let me just pull that up. Okay, perfect. Pathway number 2, lifetime insurance protection. Remember something, your kids at this age, they are, I'm going to say some of them are free from diabetes, from high blood pressure, from high cholesterol, from any type of, blood pressure issues. They're free from that. They even can say be free from obesity, right? So when you have a child that is like young, that is the perfect time to insure a child. Why? They are now considered insurable, rather than later on as adults, we get the issues, right? The issues of high blood pressure, high diabetes, obesity, high cholesterol, and different things that will cause insurance to say, you're uninsurable. But because you're starting now to protect your child, they are insurable. So the health issue like high blood pressure, as I mentioned, diabetes or obesity can impact insurability. But when you buy the policy, when you start your child's future today, and you're starting that protection on your child today at a young age, that will ensure that they will always have coverage, regardless of their future health challenges. Regardless of their future health challenges, because you started early, guess what? That child is protected. You want to be sure you're protecting your child, not later, but now. So that was pathway 2. Pathway 2 is what? Lifetime insurance protection. Here go pathway 3. So understand again, we want to be sure that our child's future is protected. We're talking about protecting your child, protecting them. Pathway 3 says guarantee future insurability. Again, here we go again. Guarantee future insurability. With our policy that we put in place, it offers that. It offers the guarantee insurability rider. We always put that on every child's policy. This allows additional coverage without a medical exam, ensuring lifelong insurability regardless, you hear me again, regardless of any future health condition. When will you protect your child? Is it later or now? So when I think about insurance, right, I think about this. I think about us having car insurance. You get car insurance not to get into an accident. You get car insurance because you don't want, if in case of an accident, you are protected. Then I think about, rental insurance. I think about mortgage insurance. You don't get mortgage insurance and rental insurance because you want your house to burn down, right? Or you want your house to be broken in, or you want, you got a flood. You don't get that because you want that. You get rental insurance and mortgage and protection because in the case of anything can happen, you can say you have that coverage. When it comes to medical, you don't really get medical insurance. You don't get medical insurance because you want to get sick. You get medical insurance just in case you are sick. You can go to the doctor because you have coverage. The same concept goes right now to life insurance. You don't get life insurance because you think you're going to die. You get life insurance to protect your family, protect yourself, because death is promised to all of us. You hear me? Death is promised to all of us. So I believe that life insurance is not a if, it's a when. Life insurance is not an if, it is a when. So let's go to the next, the fourth pathway. So lock in rates for life. You hear me? Lock in rates for life. I want you to understand that it's so powerful to know that you can have something like this and it's locked in. So Chelsea, you will see Chelsea's policy shortly, how this policy really gets you, her policy starts at when she was 11, but it shows, sorry, when she was 12, and it shows her age of 13, which is now how much it is. And it continues to grow all the way up until she's 120 years old. So whole life insurance on children comes with a low premium. You can get a child coverage for $25,000 coverage for under $30. If your child is not worth $30, I wonder what's going on with you, right? So the minimum you can get a child, depending on the child's age, it can be under $30 for $25,000 coverage, right? So you can lock in that low premium rate, which can ensure affordable lifelong coverage and financial security for that future child, for your future family, right? So number 4, pathway 4 is a lock-in rate for life. Okay, so now we're almost close to the end of this presentation. So the fifth way is the fifth pathway is financial resources in times of loss. Financial resources in the times of loss. So remember, things happen. So when things happen, guess what? You can rely on this same policy that you have. And if anything happened, a whole life policy provides financial relief, allowing families time to grieve without the pressure of work or bills. So you have to understand that life will happen. It's not an if you're going to die, it's a when. We don't like to talk about death, but understand that it's promised to all of us. Just like you come in, you will also go out. So when you do have protection on yourself and your children, you save your family the headaches. You save your family the problems of trying to figure out how to bury you. You save your family the embarrassment to start doing GoFundMe because you don't have no access to capital to do a burial for you. They don't have access to capital to do a burial for you. So financial resources in times of loss. Okay, I'm moving a little bit fast because I really don't want it to go over 45 minutes. So as I said, building wealth for your child can start at $25 a month. The minimum, the smallest, $25 a month. A whole life policy can create a financial asset for your child with as little as $25 per month. Invest in your future today. With Lambert Legacy Financial, my goal is to help you. I'm not taking the money for myself. I'm telling you to take this money from what you're doing right now in a traditional bank, which is not doing anything for you, and look into getting a policy for your child. I have a client. Her son is 5. Yeah, he's 4 years old. Will be 5. She put $150 on this child. And if you see this kid's policy when he's 21, he has already in saving at 21 years old over $150,000 in savings where he can use that for whatever he wants. By the time he's my age, 44, he's already a millionaire. Why aren't we doing this for our children, y'all? You're putting the money in, you're housing your money anywhere. You're warehousing your money in a traditional bank, which yield you nothing. And I don't mean to yell, but I really want you to get me. I'm not telling you something that the bank's not doing. The bank does this. It's called BOLI, bank-owned life insurance. The corporate does it. It's called COLI, corporate-owned life insurance. But you're not doing it. Why? Do what the banks are doing. Don't do what they're saying, because they will always tell you to go around everything. They will always say, come to us, give us your money, put on which we'll do something with it. We'll find some. Why would you give away control of something you work so hard for? Every day you wake up, go to work, clock in, clock out. Every day you do business, clock in, clock out. To now sign over a check to an institution who's warehousing your money, and you don't have control of it. You don't even have dividends to prove that it's growing for you. You don't even have a life insurance policy from that same money that you put in that traditional account. Make that make sense. You have you every time you get money, you interrupt it. It doesn't make no money for you. But if you do it in your tradition, your privatized banking, guess what? You can pull from the cash value that's there, borrow from yourself. Your cash value is still there, uninterrupted, making money for you, right? Is this your collateral is your death insurance? So it's such an easy concept. So I want to show you my daughter's, let me show you if you can see it. I'm going to zoom in a little bit more, Chelsea. Let me just pull her name together. This is my daughter, Chelsea. Make sure you can see it, see a little bigger because sometimes it's a bit small on here. But you may I'm going to zoom in a little bit more so you can see it. It's actually, there we go. Okay, let me see. So I'm going to start from the top here where you see, again, for children, they can only receive whole life insurance, not term. Okay. So you see it's $126,310. Where you see where it says receive, my goal the first year is to allow for me to dump in $1,225 as a savings in the first year. That's a full one-time full dump in. I can do that. Okay. My state is Florida. If you go over, that's my daughter's name, her age, and monthly, her monthly is $150 per month. That's where you see this $1,800. $1,800 means 150 times 12 is 1,800. So you see right here the 22,200. That's the 1,800 plus the 1,225 and her 150. That's what you get that right here. Okay, 2,200. So I'm going to show you two areas. You have guarantee value, non-guarantee value. Remember something. We really don't mess with the guarantee value at all because we are with a company that is called Emeritus. They have never missed a dividends in over 100 years. All right. So we will always be on the non-guarantee side where you see the annual dividends here. And you, so right now you see her annual dividends, the cash value, and the death insurance. Remember, her first year, the first day we bought $126,310. But look what happened. Her cash is $2,130 in her cash savings. Her death benefit grew over $20,000 that year. That's Chelsea at 13. That's this year. That's how much is in her savings this year. Okay, let's move down to her at 10 years later. 10 years later, she now is 22 years old. Look how much saving we've saved for my daughter in 10 years. Tell me what 20-year-old right now that 22-year-old right now has $20,000 that they have savings with a $202,000 death coverage on themselves. My daughter will. I'm going to move all the way down again. Remember, her outlay every year is $1,800. That's 150 times 12, right? I'm going to move down to where, let me bring it up a little bit more. I'm going to move down to my age, 44. So at 44, which is this line right here, the second line at the end, do you see how much savings this child has? $113,283. But I want to bring you back to something. Do you realize in 30 years, the company has given her dividends of, again, dividends is like free money. It's a surplus of, basically they give back to you what they feel like, the insurance gives back to you a proceed of basically your premium. Okay, that in the last 30 years, they gave in Chelsea the dividends of $22,732. Can you imagine? That money right there. She can take that just that and rebuy more insurance. She don't got to spend it. She can pull it. She can use it for herself, but I would never tell her to use that. I would tell her, buy more, buy more. So 22,732 was free money. If she had left her little $1,800 in her account every year, if she had left 150, she'd have had no dividends, which is that 22,732, and she would have never had any life insurance coverage. Look how we started at 126 30 years ago, but she's at now $363,000 in death insurance. But look at age 47. At age 47, look at this. Look how much she has, $134,000 in savings and over $400,000. It literally in 35 years, it literally her life insurance actually 4X'd, $408,000 in death coverage. God forbid anything happens to my baby at that age, her family not only have this one policy, this is just one. She has a second policy just like that her dad pays for. So we pay for the similar policy, but two different, the mom parent, mom the parent, dad the parent. So the same, so she would have a total of almost $900,000 and over $270,000 in cash that she can use. She can use that to pay down on a down payment on her house. She can use that for her wedding. She can use that to invest. She can do that for anything. Okay, so just wanted to show you what a 12-year-old, again, my daughter is 12 years old. This is a 12-year-old policy, what that looks like. So you have the same opportunity, whatever age your child is, get a policy. Remember, ages, we go by the ages and it's going to be different. So this is just my daughter who is a female at age 12. This is what $150 a month gives her. I'm sorry, that's not 150. My apologies. I believe it is Chelsea's not 150. I'm calculating. Chelsea is 150. Yeah, 1,800 is 150. My apologies. Yep, 150. So it's 1,800. 1,800. Okay. All right. So let me just move. I hope you can see this. I'm going to zoom out a little bit more. We're almost getting close to the end, y'all. So why infinite banking for your child? Secure their future now. One is going to start early. Grow with them. Start an infinite banking policy for a child. Set them up for a long lifetime of financial security. I want you to understand that. You're going to set them up for a long lifetime of policy. Okay, let me try to zoom this in a little bit more. Okay, perfect. So next, is benefit in this. There's benefit for the childhood. Lower premium, guarantee insurability. And this can be used for educational fund, or they can start a business, or they can borrow from their policy to buy a car. So that's a great way of, looking at it, utilizing the infinite banking concept at a young age for your child. Third is when they become an adult. Now, remember that policy grew with them into their adulthood. You now set up your child to be debt-free. They didn't have to get no student loan. They didn't have to access no liquid capital for any type of need. Why? You have created a bank that they can actually use. You also allow them to build wealth. The policy has this cash value, which continues to grow, creating a self-financing tool for them to purchase a home, start a business, grow a financial future. Even at an adult age, you help them create legacy. This policy continues to grow with them and can be passed on to their next of kin, their child. Okay. So how Lambert Legacy Financial can help? We specialize in helping establish infinite banking for your child and for yourself as a parent. We also help you build cash value for lifelong financial benefits. We show you how that is going to be done by doing a full dump in the first year, and show you how you can add savings each and every month or every quarter, every year for that policy. We also lock in a low rate for life for the child, and we secure the financial future through strategy planning throughout your life with the policy. Okay, y'all, I'm almost there. It's time. It's time to take control of what you work so hard for, your money. Parents, we work so hard for our money, and we say we're doing this for our family, we're doing this for our kids, but yet we don't own it. We don't control it. We just work for it. So it's time. It's time to reverse the role and become the bank. It's time to do what? Let's reverse the role and become the bank. Take control of your financial future by leveraging the infinite banking concept, and I will help you do that. Starting now. Don't wait. Don't wait. Okay, so what I want you to do is get a consultation with me. Go to LambertLegacyFinancial.com. LambertLegacyFinancial.com. It's free. It's free to talk to me. Let's get a consultation. This is an opportunity for you to really ask me some questions. I can go over some information with you. I will also open and share with you, some information that is needed. You will answer some questions for me so I can get an idea of what you can do. I will ask you, how much do you save right now? I will ask you what you would like to save for your child, how much you want to start your child's bank with. Those are some questions that I will ask, not to be nosy, but to be aware of how I can help you. And because this was a lot, I want you to continue to learn with us. So go to learnmorewithcore.com, learnmorewithcore.com. There's some small videos there. I want you to tap on each video, watch them. They're 3 to 5 minutes videos, really short videos. Watch them, learn. Okay. And don't forget to go to LambertLegacyFinancial.com to make an appointment to sit down with me. Okay. So almost there. So this is what's going to happen when you do connect with me. We're going to do what we call a priority plan and review. That's the first thing, is a 2-sheeter for you to fill out. We're going to schedule a review session to answer any question. Third, I'm going to fill out what we call a health and life profile to see if we can send the offer over to the insurance company for them to accept the offer that we're asking for, which is to start your bank. 4, we're going to schedule a bank preparation where you will see what your bank will look like. 5, I'm going to deliver your bank policy to you. And 6, I want you to continue to learn and grow with us. So I'm going to play this quick video. Let me see if it will click here. Hold on one second. Supposed to click, but it's not. Okay, hold on. Let me see. All right, so that's it, y'all. Let me just move. I'm supposed to click. All right, this is it. I'm going to stop sharing for right now. So I am excited. I hope this was helpful for you. I wanted you to see that video, but when you do go to LambertLegacyFinancial.com, there's a video that is there for the children. I want you to watch it. It goes over quickly the pathways to the 5 pathways, again, for the children. Take some time, watch it, please, and thank you. So I'm going to scroll put on the screen right now so you don't forget the banner for hold on one second. Let me find that. Okay. Don't forget to go to, let me put it up here. So the first one is learnmorewithcore.com. That's some quick videos for you to watch and to break this presentation. Is not all about the children. It's the overall presentation about how you can become your own bank. So definitely go to learnmorewithcore.com. We do also have a place where you can get all the different books that I have read. It's called corereads.com. All the books are there for you to read it, learn, and understand it. For adults, if you want to get out of debt, we do have a debt strategy that we can do. So you can go to coredebtstrategy.com, watch that video, connect back with me so you can actually be able to understand how to really get started. So I'm going to hold on one second. And the last one is lambertlegacyfinancial.com, lambertlegacyfinancial.com. I pray that this was very helpful for you. I hope it was. As a parent, I believe that it's time for us to really take full control of our future for ourselves, but also don't let our children feel the stress that we have been feeling because we weren't financially prepared for our future. Prepare for your child's future. It is very important, parents. Don't allow, we're saying we're working for them, but really and truly, we're really only working for us, because if we were working for them, we will never want them to feel what we have felt all these years, the stress, the anxiety, to try to rob Peter to pay Paul and be living in that survival mode. So let's prepare their future now. Don't wait for later, because regardless of the matter, you're warehousing your money in a traditional bank and they're yielding no interest to you. They're not really for you. They're against you. Because if you don't have your money in their banks, guess what? They don't have any business. You're giving them business. Take the business away from them and be your own bank. All right. So I look forward to connecting with you. Please visit me at Lambert Legacy Financial. Join the challenge. Go to 21dayswealth.com. That's the registration. Join us on Facebook at Lambert Legacy Financial page. Join the page, and every single day I will be logging in and talking about how you can become your own bank and be financially free. So until next time, y'all, I want you to take care, take charge, and continue to be great. I truly appreciate each and every one of you. Bye for now.